Hope everyone's doing well and welcome back to another video. So today's video is gonna have two trade breakdowns, right? Two quick ones, two losses, unfortunately. And we're gonna talk about why. First of all, that's not the end of the world. And lastly, we'll end on a bit of an outlook for the rest of the week. It's a bit of a difficult one. It's still it's only Tuesday. Tuesday hasn't even closed up, and then tomorrow we have FOMC meeting minutes. This is where the real, I'd say, midweek outlook happens after this. But yeah, we'll touch on that. Right, we'll come to that. So let's start off with expectations for the prior day first. So let's ignore today's markings. Sure why this doesn't want to go. Okay, cool. As you guys can see, first of all, we've marked out this daily large range, daily, OTE. I might show you guys one more time. In this range, right, as we come into this week, this is Friday's candle, this is Monday's candle. On Monday, we knew we were approaching the premium of this daily range. From this premium, of course, right, we are looking for moves that, but understanding that on the Monday, where we opened up, was trading lower initially, right, you guys can see here, and then displacing higher. It essentially meant we knew, with this initial move, we haven't really got into that premium. And then on top of that, as we come to a lower time frame, right, what we actually see on the Monday, turn this indicator on, is that we'd left this sort of initial consolidation. Now, this initial consolidation did get swept by Asia, but if anything, I would, argue that instead we added to it. If anything, Asia had added onto this, right, and these became relatively equal highs. And from there, price traded away. And as price traded away, come over to a 4 hour, what we were searching for eventually was higher pricing. Now, if some of you guys remember your arrays correctly, you would understand that this is actually a fair value gap, right? Or this a redelivered rebalance. Price traded into this zone, swept candle 1, candle 2, candle 3, swept the liquidity, and then displaced higher. That set the stage for a higher New York kill zone, especially after the way London closed. And if we just look at it from the perspective, you've seen London do this, displace high, you come into New York and you look over to your left and you just see, wow, 1, 2, 3 flat highs. It was just a very obvious target, right? Sort of the current / previous daily high together. Basically, we wanted to see that hit out. So how did we go about this? Cool. 1 second. Block the chat just so we can do it in live time. Okay, cool. We've come into the chat, we've said, let's mark 103.191 on the DXY, which is around here, 103.192 actually. So we'll mark that out as we come into New York. This is obviously the target for the session. We've decided to focus on GU, and right, I'm doing this trade breakdown a little bit differently to the other one. I'm giving you guys the sort of walkthrough of, this is how I'm actually approaching the charts, and this is what we're actually looking for. We've come over here, we've had a look at EURGBP, and very obviously price is bullish. Right? If we take a look at this Monday's candle, huge up candle, which made for a good setup on GU specifically, right? Turn that off. So cool. And as we came into Monday, it just became more and more obvious. Price just wants to trade higher. It doesn't want to, give us that retracement. It doesn't want to move this way first. It just wants to go up, right? And knowing that, seeing that, especially on the lower time frames, right? I always say to you guys, I don't want to brush over it. Is with EURGBP, we want to pay particular attention to when we are actually trading that. When we are getting in a setup, what is going on in price, right? So if we're looking at New York kills on here, on EURGBP, right? This is, of course, where we're looking for the setup. What's, going on here now? From the 1 hour chart, there's nothing amazing. There's nothing, too crazy that we can see. If we consider the 4 hour candle that sort of encapsulates our session, right, it runs in, between these two. And the way this candle had closed, it's traded quite low, it's traded away. It sort of set up the bias for the next candle to be, the likelihood is that we expand high, right? When we leave a big wick like this, I'm not necessarily thinking, oh, the next candle is going to come and sweep this low and then look for higher. Rather, it's likely price will continue building the range and the following candle will also go higher. And in this scenario, thankfully, it was, quite a large move up, if anything. Oh, yep. Now back on the DXY, what we wanted to see specifically as price approached this, over to our 30-minute chart, was price, trade lower, sweep the previous 30-minute candle we said early on in the session, right? So we've said that around here, which is 8 roughly, and the OTE that we are watching for price is, I know it's getting very messy, lots of different markets in the chart, but why essentially are we watching this OTE? Now I know I will get this question because this is a low from London March. It's not a low from London, but rather a low from March. So why are we using that as a swing point? Now, I would agree, some people might be saying, they're thinking, oh, that's not a great swing point to use. At times it may not be, but when we talk about time and price, this is where that dynamic comes into play, right? When we have price going into New York kill zone, it's not really done anything crazy yet, but clearly it does not want to reach for a low. And the obvious drawn liquidity is this way. So what does that suggest? The likelihood of price, suddenly reaching all the way down here, then going all the way back up is not as high as, price respecting this very clear swing point that's been made, tracing into this range and then trading higher. Now, also, I told you guys this trade was actually a loss for us. Why was it a loss? Even though, here you can see the OT is actually played out. If you go over on GBP USD, there, we'll actually take a closer look. Oh, yep, goes on. The OT on GU that we're watching was from this high, this low. Price is traded into that, and then of course traded away. Had a massive down, massive. We had a sort of ambitious target that I did not expect to get hit on the day, but I knew there's a possibility somewhere around here. Smart that roughly, and price absolutely hammered down GU because of EURGBP being such a one-way move, right? So let's come back on DXY and see what's happened. So as you guys can see on the other screen, on the GBP USD, we didn't actually hit the premium, right? So how we were viewing the range initially was at this, right? While we viewing it like that, I'm going to turn the session indicator off. It's getting a bit messy. You have low to high, price retraces to the discount, hits the previous, order block, previous swing, trades higher and breaks the high. So we have entered on that initial move away. Right. In a scenario like this, as prices hit that discount, and I'm seeing the candle start to print away, we've manually executed around here. Why? Because to me, this is discount entries, it's the same as getting tapped in at OT essentially. And as price has moved away, right, I've got that confirmation, okay, I think price is trading higher. So somewhere around here, we found that entry now, especially with these big candles that start to move in our direction. Going for essentially a manual execution somewhere around here. Covering this low, right? So now, if this is the swing point that is going to hold, or rather, I'm expecting this to be the swing point that is going to hold. And I want to see price trade higher from here, and we'll simply target this, and that will be a good setup. So when we went into the setup, I didn't anticipate that price would now retrade lower, sweep us out, and then go back up. But that is what's happened, right? We've got, essentially both sides getting swept once and then price trading eventually to draw liquidity. So here where we were in the position, price has taken that high and we haven't managed to get any stop loss trims. Why not? Right? Because essentially, even though price has taken this high over here, this was still the point of invalidation for myself. And you're also, now price is trading against us. We're seeing this displacement. It's pushing us quite hard. It's printed 2 large fair value gaps there. It's hit deep into the discount and then it's traded back higher. Right. So I also wasn't, interested in getting the re-entry. guys will see something quite similar today. So essentially, we've let that swing get placed, seen the movement away, and said, okay, cool, this is a new hourly candle. There instead. A little bit messy here, but based on that 8 a.m. close, I know the body isn't telling us much, right? I wanted to see, or rather, sorry, based on the 7 a.m. close and then us then sweeping it in the following candle, we just matched that up. We've essentially entered at the end of the 7 a.m. candle to start the 8 a.m. The 8 a.m. candle has then, essentially moved up, taken the previous candle's high, hammered down, and come and swept the previous candle's low, I believe. Yes, it has. So it swept both sides of the previous candle and then continued higher. Right now, what that looked like on GBP USD for us was actually a very early stop loss. Meaning, although DXY had a bit more, breathing space, as I said to you guys, this was the range, right? We let price make this high, even though this high is not in a premium. As price started to move away, right, roughly around here, we then look for shorts. As such, and then, the initial target, I believe, was this previous daily low, something along those lines, right? Leave it somewhere here, just line it up for the sake of lining up, just so you guys can see the whole setup, right? Oh, actually, apologies. No. We didn't have a target on GBP USD. Now, this makes for a good talking point. We didn't have a clear target on GBP USD because GBP USD was extremely bearish. It was so bearish, it had already, flown through the previous daily low ages ago, whereas DXY hadn't even got close to it. So what can we do in that scenario when clearly this pair is bearish and we can short it, but we don't have a clear target inside? The DXY has a clear target inside, right? So the idea was, look, we'll hit the trade from here. We have an invalidation point, and what we will do is we'll hold this trade till DXY hits the given target. Eventually, DXY did hit that given target, I believe somewhere just getting into about an open kill zone. So I believe it would have been around here. So assuming you had held the trade, it would have been a nice 3R trade, without being stopped out, unfortunately. But yeah, that is essentially the first loss. It's not, something I'm too annoyed about. I think it was a solid setup. It's not something we expect from price. Price started moving away, went in our direction quite well, and then absolutely flew the other way. And the truth is, if I was in the sort of larger OTE, right? If I was in a position, for example, if I had hit from somewhere here and taken sort of higher time frame trade, or getting down there, wherever it is, and I saw this displacement against myself, big fair value gap next candle, also, clearly looking at the reach for the high, the likelihood is I might have jumped after, right? I can't say with full confidence that I may have held that trade. That's a lot of energy going up, and eventually, of course, price did fall. So it was a bit of I would say a bit of a funky setup. It's not the worst, it's not the best. And in hindsight, what would I change? Right, what's the sort of even better if here in this scenario? I think is sort of understanding the conditions, right? We knew we're in particularly volatile conditions. Price isn't essentially, it's not being smooth. It's giving very nice moves, but it may not be smooth. It can be very, whipsaw. It can be up and down, and that's what we've seen, right? So what's the sort of, intuitive thing to do? I think is to sort of just hop out of time frame, right? And that's the sort of approach we took today. You guys will see. But I think the approach that I would have done, of course, would have worked out better, is to use the 15-minute, consider the 30-minute instead of seeing that 5-minute and considering that displacement, because the likelihood is the more you come out in terms of time frames, more likely you have to get direction right. Of course, it might move a bit slower, it might, essentially might get bored watching it, but it's safer, right? It's good. So in these conditions where price will move, have the opportunity to use that slightly higher time frame, do it, right? It makes a lot of sense to do so. And if I even myself, for example, if I had used that 15-minute sort of OTE and range instead of that 5-minute displacement down here, it would have saved me from that 1% loss, right? But cool. On to the second setup. So try and make this one a bit quicker. I think the one from yesterday was a bit more fruitful. It was a different perspective to what I think a lot of people did manage to catch or see with price. So coming into today, right, we know we have these two up candles. Based on where yesterday's candle closed, I was actually looking for previous daily high to be taken, right? I know we're in a daily premium and I know we want to short from here, right? But for us to short, right, how are swing points made? Swing points are usually made by us, sweeping a candle, sweeping the previous candle, of course, and, usually moving away. And it's not often we will see, these sort of one-way candles with no top wick. There's an extremely small wick there, right? So now clearly price is consolidated here. But as we came into the day, today, Tuesday, London open session had quite a large move up, right? Had this, sort of big range. London's retraced into this with Asia and had this massive candle up, right? This displacement up mid-session. And what we see is we've built quite a large range. And right at the top, we have this initial consolidation, right? We know we have something that price can hit out. You should see it. And from the looks of it, right, from the way London Open has shaped up, we take it as an OTE, which is what we were doing today, London to New York OTE. Should have been as such. And then, as you go into New York, you see there's a new high. We use the new high. See, price came into that discount. It actually gave that initial delivery to the high, but it did not actually hit the drawn liquidity, right? Again, very sort of funny price action to a degree. So how did we approach today's session? We know we have the low, we know we have the high. One is the discount entry. New York has come to this discount pretty early on. It has swept this low very slightly, right? Not a crazy sweep by any means, but essentially by doing so, it's hit the discount and we've taken the trade from here, right? We've gone long on the DXY and we've looked to short GBP USD. We assume it was about an equilibrium entry. From there, we've then targeted the high. Would have been a very sort of simple trade, but as you guys can see, it's initially tapped, traded away, gone into drawdown, traded down a bit harder, gone very deep, then all the way back up, and now all that. Very weird price action. If that says, or I'm saying weird, it's not. It's essentially consolidating, right? We don't have any massive news drivers today. It's not the expectation, but why do we still sort of approach the market? Because there's a lot of volatility in the market, and we know the markets haven't necessarily been responsive to only news folders as they may have been in the past, right? They're very focused on what Trump's saying and the sort of like the global economic situation that's going on, right? So taking that in mind, knowing that can essentially we're going to get something every day, some sort of movement. I haven't seen the charts, but I'll be very confident the stock market's done some sort of backflips today because Trump said some absolutely ridiculous things. And in turn, we would expect volatility in general across the markets. And of course, on DXY, we didn't get that delivery, but that expectation existed as we went into the session, and it looked like we had a very obvious target for us to use, right? So we've hit that trade very early on in the session, expecting it to be a London to New York OTE, price to expand this way. Based on the previous 4-hour closure, so if you guys see, order block, 2 up candles, and this candle, right? It's essentially New York's candle. I would have anticipated this candle to only trade higher. And of course, it was a bullish candle, right? But I would have expected this candle to come and just smash this high out. From there, we get a reversal. Now, how did this pair up with GU today? Unfortunately, we were on the complete wrong side of EURGBP today. The complete opposing side. And what this meant for us, right, in New York, was we're long in the DXY, therefore we are short in GBP USD. We're using a London to New York OTE. Very early in the session, right over here, roughly here, we have shorted. Mark this out for you guys. Shorted from somewhere around here, I would say. Covering the high as usual and targeting the low. So from there, again, looks like a fairly solid setup from the looks of it, right? What's happened, you guys can see, absolutely insane. Price has traded higher, got so close to taking us out there, but just absolutely consolidated here. And what we've actually said is, you know, we'll hop out of the trade a bit early. Managed to get out at around, I believe, 0.7% loss for myself. I know in the chat I put 0.8 because from when I got out, it's gone up, you know, just that little bit. So what's going on here? This is essentially the opposing case of what happened yesterday, where EURGBP has made GU fly. Today is essentially stalled it. And Euro, you know, if we go over on Euro USD actually, and we take a look at the sort of short offered around the same time, not bad at all, right? If you take this London to New York OT and we hit it on EU, and we had entered roughly, you know, towards that start of the session, technically the entry would have been hit, right? This is roughly where we entered on the DXY and GU. And from here, it would have been difficult to pick a specific stop loss, right? But let's, you know, benefit of the doubt, somebody got in, covered the high or covered pretty high up. You know, in situations like this where you're very confident, but you're not sure what to cover, let's say you're entering here and, you know, you're essentially banking on price, respecting this 1 hour fair value gap. For example, what you may do is cover the 1 hour fair value gap candle. And that would ensure essentially that you don't have a negative RR even if price hits here, or, you know, even if you take the shortest target essentially. So in this scenario, you know, you might target this low and it would have been a nice, so you wouldn't have hit that final target. It did reverse, the same as the DXY essentially, right? Because this is just a consolidation building, but the setup was there, right? Of course, on GPUSD, I'll be very surprised if anybody got into this and managed to sort of, you know, really hold through this consolidation. This consolidation, I would have bet, you know, even if I do think it's going to run lower, it's going to run the high first. It's going to run that high, then it will reverse and blah, blah, blah. And at that point, your stop loss is getting hit. So it's just wise to just take it where it is. You know, I was banking on maybe we'll get a little bit of a move away and we can close it for a smaller loss. But, you know, I didn't want to sit there and wait. I was just like, you know, might as well just take out now. The likelihood of our stop loss getting hit is pretty high. So, yeah, at the start of the video, I told you guys I wasn't very, you know, concerned. I know it's 2 losses back to back, 2 almost full losses as well. The reason I'm not concerned, there's a lot of volatility in the markets. And for some people that may be scary, but as a trader and somebody who's, you know, confident in their craft and you know what you're doing, this is essentially opportunity. It's not something to be scared of where you back away and you think, oh no, like, you know, the market's too crazy, I can't. If you're looking at it, of course, we know the market's moving, right? It's giving big moves. But these are moves you can be a part of, right? For example, here, this could have been a textbook short for someone in London. This is just a random day I'm cherry picking. You know, yesterday's New York OTE was offered. Of course, we lost to that. I know some people may have won with that. The opportunities are there. And what we're seeing here is some very nice runs, right? Somebody got in these shorts, big move down. Somebody got in the shorts in New York, massive move down, right? So don't let it scare you away. Now into just a really quick outlook, right? Because of course, it's hard to say from where we are right now. Essentially, we have FMC meeting minutes tomorrow. I would expect this to be significant. I think a lot of the market is waiting to see what the Fed will say, the Federal Reserve. And then past that, we have CPI and PPI. I think it will be how impactful these will be, I think will be dependent on what they're saying on the Wednesday. If we come over to the DXY, we still sit in the daily premium and we've started consolidating. What that shows to me is that the likelihood is we're going to get bit of an AMD reversal, which is great. That's the sort of thing we like to see. If this is accumulation, I'd like to see a quick run up, then distribution this way. That's the sort of thing we're after. If that plays out, I think it's very easy shorts to pick off targets. You know, you've got target here. Of course, we have targets past that as well for ourselves, right? On the other hand, we look at the US 10-year. It's been moving up quite strongly. Now, despite that, we're still in bearish range. It's just come very high into the, very similar to DXY. If there was ever a time for a reversal, it's now. Especially with news drivers for the rest of the week, and so far the week only moving in one direction, I would bank on the reversal coming very soon. If it's not triggered tomorrow, then Thursday. I'm not really anticipating price, you know, on the bond yields and on the DXY to trade through its current highs. Is it possible that we, you know, do that, then we still reverse? Yes, but we would become much less confident in being bearish if a scenario was like that was to occur. especially because this is some big displacement up, right? It's not concerning as of now because we've only hit the premium, but if this was to continue and, you know, smash through this high, then we definitely have to rethink some things, right? EURGBP, massive move up to start the week. Look at the weekly candle, only up, but I think there's a high that price clearly wants. It's left equal highs with this small high, this candle's high, but I think this is the buy side target for now. Past that, we also have this high right there, both in reach, but I would bank on price hitting this before some sort of reversal. That's what we're waiting on. I think price will continue to trade higher, especially with today not really giving much. I believe today is a bit of a, you know, retracement / order block candle. Now you've got this big wick. The likelihood is price trades higher from here, and the next target in reach is actually the drawn liquidity and of course the local high. Look at Bitcoin. I don't think it's done much yet. Ooh, bit of a move down actually. So cool. Yeah, that's good to see. Bit of a kick down right from the Sunday. Monday's not done much, and now it looks like today wants to trade lower as well. Essentially what we've got is a new leg of the range. I do think the range is probably still being built, so I would bank on lower prices for now. Where can we see Bitcoin? The levels that I would definitely mark this previous, and this is a logical place for us to trade, which is roughly about 70k the dot, somewhere around here maybe. I would bet that price trades into this zone, and then from here you're sitting at, if this was a mark out the classic ICT OTE, right? Yep, roughly it will hit into the 0.62 over here. Yeah, 0.705 looks quite nice as well. That's, you know, monthly candle low, but anywhere in this little cluster, if there was, you know, if this is the sort of discount entry being offered to us, this is the area I would be looking at it to hit from, to get into long. But even from now, if some of you guys are long-term investors, you're in that higher time frame discount, it's probably a good area to start, you know, getting those dollar cost averaging entries in, start DCAing in from here. And lastly, nice little drawing, we'll just keep that there. Starts looking a bit fancy. Yeah, so we are looking for lower prices on the S&P, especially with today's daily candle. You know, daily IFD moving this way, the likelihood is we trade lower. We just wanted to see price dig into discount. It's nothing crazy. We don't want to see, you know, price absolutely dump off here. We've already had a massively, you know, big move down. Prices, you know, like very gently tap the discount, but I think it can dig a little bit deeper, right? If price can trade slightly lower, especially coming off this, you know, daily IFD now, take this current low out from there, I think it becomes interesting. That's when we can start talking about, you know, is there a reversal here? Are we about to get some serious relief? But that is the plan for now. For lower prices, this low is a good target. Once we take this low, I would sit on hands. And very similar to the, Bitcoin, any long-term investors, once we take these lows, that's probably a good level to start adding and considering investments. That's the sort of thing that you like. But yeah, guys, that is it for this video. I know, you know, this trade break, and I tried to take a slightly different approach, especially with this first trade breakdown. Now I might sound a bit boring today. I've been up to a lot, so been a bit drained, but hope that covers everything for you guys. As usual, any questions, anything I can help with, just leave a message below or put in the Telegram chat. I'll be happy to help.